Today, we're going to dive into the absolutely wild and honestly pretty cautionary tale of a massive gold price surge. And at the center of it all, one man who gambled his entire life savings on it. Yeah, it's a story all about greed, fear, and a very, very expensive lesson. Let's get right into it.
Can you imagine? This is the thought that kicked everything off. Just a quiet little question inside the head of our main character, Anne. He's staring at his phone and his mind is just racing. It's this perfect mix of no way and wait a minute, what if? That one question, it was the start of it all.
And here it is. This is the exact number that stopped him dead in his tracks on October 15th. $4,162.50 for a single ounce of gold. Now to you and me, that's just a price. But for Anne, that was a siren's call. It was the catalyst for a decision that was about to change his life.
Okay, so how did we even get to a price like that? Let's set the scene, because this wasn't just a random spike. A serious case of gold fever was spreading, and An was about to catch it.
So, this is Anne. And the most important thing you need to know about him is he's a totally normal guy, right? He's not some Wall Street hotshot. His biggest daily worry was probably just making it through another boring meeting. And that's what makes this story so powerful, because it really could happen to any of us.
And you can kind of see why this felt like such a sure thing at the time. You had this perfect storm brewing. First, the Fed was basically saying, hey, we're going to make it cheaper to borrow money, which usually sends asset prices soaring. Then you had all this tension between the US and China. And whenever there's uncertainty, investors pile into gold. It's the classic safe haven. And the cherry on top? The big guys, the huge funds were buying it up by the ton. It looked like a one-way ticket to easy money.
And this, right here, this is the battle that was raging in An's head. On one shoulder, you have that powerful FOMO, the fear of missing out. He's seeing headlines, hearing crazy predictions of $5,000 gold, but on the other shoulder is his friend Kwa, being the voice of reason, asking these really important questions that An just did not want to hear. So what do you think M does? He completely ignores the warnings, of course. He places a small bet, and for a little while, it feels like the single best decision he has ever made in his life.
And there it is. Gold smashes through to a new all-time high, $4,180 an ounce. And Scott's small bet is paying off, big time. And he's not just making money. He feels like a genius. You know that feeling? He feels like he's cracked the code, like he saw something nobody else did.
And this is the moment it all goes horribly wrong. Drunk on that initial success, Anne makes the classic, fatal mistake. He decides caution is for other people. So he cashes out his entire life savings, he takes out a loan, and he shoves every single dollar he has, and some he doesn't, right into gold at its absolute peak.
You can probably guess what happens next. This is the moment the dream turns into an absolute nightmare. The reversal was sudden, it was brutal, and nobody, especially Anne, saw it coming.
I mean, just try to put yourself in his shoes for a second. Every headline, every tick of the price, every fiber of his being is screaming, "You're right." He is absolutely convinced he's on a rocket ship straight to financial freedom. What could possibly stop this train?
Well, this could. The one thing nobody was betting on, that US-China summit that everyone expected to be a disaster, it actually went well. And just like that, market fears eased, and the entire reason gold was so valuable, its whole identity as a safe haven from chaos, it just vanished instantly.
And the collapse was just breathtakingly fast. Look at this. He bought at the very top, 41.80. 15 minutes later, the floor falls out. 30 minutes later, it's in a total free fall. And by the 45-minute mark, pure animal panic sets in. He hits sell and locks in a loss that changes his life forever.
So, what's the takeaway from this absolute train wreck? Well, Anne's story isn't just a tragedy. It's a masterclass in what not to do. So let's break down the lessons he paid so dearly for.
It really boils down to two completely different approaches, doesn't it? On one side, you have Anne. Every decision was driven by emotion. He bought because of FOMO, he ignored all the risks, he went all in, and he sold out of pure fear. But on the other side, you have the disciplined approach, doing the research, managing your risk, and, this is crucial, having an exit plan before you even get in.
Okay, so this is that concept his friend Kwa tried to warn him about. And it's actually pretty simple. Just think of it like a floor and a ceiling in a room. Support is the floor. It's a price where buyers usually show up and stop the price from falling further. Resistance is the ceiling. It's where the price has trouble breaking through because sellers start taking profits. Anne's massive critical error?
He bought his entire position right as the price was banging its head against the ceiling.
So how do we make sure we don't end up like Ann? Let's turn his pain into a simple formula. 1. Learn before you act. Actually understand what you're buying. 2. Get a grip on your emotions by having a clear plan. 3. Manage your risk. I'll say it again. Never, ever go all in, especially with borrowed cash. 4. Know who you are. Are you investing for years or trading for days? And 5, maybe the most important, start small. Gain some real-world experience before you bet the farm.
You know, when you peel it all back, On's story isn't really about gold. It's about us. It's about human psychology. And it forces us to ask ourselves a pretty uncomfortable question. When was the last time the fear of being left behind pushed you to make a big decision? It's definitely something we're thinking about.